this is Tom Nash, and I'm absolutely blown away. In about 3 minutes, the best in the business, Aswath Damodaran, came on CNBC and answered everything you need to know about Nvidia before earnings. I've been bombarded with DMs from every single person I can think of asking me what to do with Nvidia before earnings. Should we buy more, Tom? Should we sell, Tom? Should we just hold on? Should we move to Thailand and never think about Nvidia again? Everybody's bombarding me with Nvidia questions, and Aswath Damodaran answered every single thing you want to know about this company in 3 minutes. The only thing is, you kind of have to decipher this man because he's not about to give you and spoon feed you every single piece of information, but that is why I'm here. So I'm going to play you the clip and then I'm going to talk about it right after this. Check it out.
If you don't own it, the only way you can sell it is to short the stock, and that's a recipe for disaster, especially leading into an earnings report. And the way to think about Nvidia is, are you a trader? In which case, you buy at a low price and sell at a high price, and Nvidia might be the game you want to play. Are you an investor, where you're buying based on earnings and cash flows? Nvidia is an amazing company, great growth, amazing cash flows, superb margins, but you're paying a premium price even given all of those pluses. So I think you've got to be honest with yourself about the game you came to play. I think that when you use the word bubble, you're essentially arguing that the rest of the market has lost its mind. And that, to begin with, is a sign of an ego that's out of control. When you think something is overvalued, all it means is you think it's overvalued. It doesn't mean it's overvalued. It doesn't mean you have the truth. You have your truth and you got to act on it, but the rest of the world has their own truth. So my view on investing is, make your own judgments, but don't pass judgment on other people buying or selling stocks because you don't like what they pay.
Okay, so as you know in my videos, the bottom line comes first. I don't like to keep you hostage, and the bottom line is quite simple. Aswath Damodaran is saying, look, if you're an investor, hold on to this thing for dear life. It's going to be noisy. It's going to be volatile. It's not the sort of stock you want to be in and out. It's a dominant powerhouse of a stock that's going to be relevant in 10 years, and it's only getting better. Maybe there are cheaper opportunities like Amazon out there, but Nvidia is definitely a stock you want to be in for the next 10 years. And even if it's trading at a premium, it's not the worst thing in the world. That's basically what he said. If you just needed that, you're free to go. But if you want to stick around and listen to what I have to say, and we have some more clips to show you, some more data, we're going to show you comparisons between Nvidia and the competitors and all the other companies. Stick around. I have an incredible video for you. So let's start with Aswath and what he said here in this video, because I think that he packs a lot of heat in 3 minutes. I don't know anybody who can jam-pack a 3-minute clip like this guy. So what he's saying is, look, shorting Nvidia is a bad idea. So if you're thinking about going into these earnings, shorting Nvidia, don't, because the history shows you that's a very bad game to play. In fact, it's a very stupid game to play. And if you play stupid games, you are most likely to win stupid prizes. So whatever happens with the stock, shorting it into earnings is probably not the brightest idea. Number two, he's saying that you got to decide what you are. You're either an investor or a trader. If you are a trader, you're running a 100 meters dash. If you are a long-term investor, you're running a 40,000 meters marathon. It's a completely different thing. And you can't be running a marathon into a 100-meter dash and vice versa. It's not going to work. So he's saying, look, you might make some money as a trader because the stock is a little bit overextended, but it usually is. It dropped from 130 back to 100. It's now back to 130. Yeah, there's volatility there. That's good for traders, but for long-term investors, it's just an amazing company with Class A fundamentals, and it's trading at a premium like every other company in the same position. There's nothing wrong with it. Now, he's also talking about the people who are saying, oh, it's a bubble. We'll talk about them in a second. I have a whole segment about these people. Hold on a second. And he's saying, look, it's kind of a stupid claim to say. If a stock is trading at a premium that you don't want to pay, that's fine. But calling it a bubble is essentially a cope. You just don't want to admit the fact that you missed out, and your ego is basically making you say that, oh, the whole industry is a bubble, this company is a bubble. No, there's nothing bubblish about it. Now look, every time I post a video about Nvidia, the same people in my comments claim it's an overvalued bubble. Now let me show you how this usually plays out. My first video about Nvidia was in December 23rd of 2021. The share price was $29. And because it went up from $13 to $29 within a year, at that point, a lot of people in the comments were saying, well, look, Tom, this stock is overvalued. It jumped from 13 to 29. And since December 23rd, 2021, the stock has done 350%. Good enough for me. 2 years later, on the spot, December of 2023, I posted another video saying, look, guys, Nvidia is the biggest opportunity. Buy now or regret forever. This was December of 2023. The share price was $49. And the same people, the same cynics that missed out the first time were in my comment section saying, look, Tom, the share price jumped from $15 a year ago to $49 now. This is an overvalued bubble. 200% in a year, 230% in a year, that's an overvalued bubble. Stay away from the stock. Now, needless to say that since that point to now, the stock has done another 165%. So let's just come to the conclusion that Nvidia is not a bubble. And this principle applies to every single investment out there, every single stock. Look, since the beginning of 2023, I've posted about 9 companies I like. I'm going to put it on the screen right now so you can see the date at which I posted and the price of the stock at the post date. We are up 112% on this 9 stock list. It's just another proof if you find good companies and you stay in, all you got to have is a couple years, you're going to do well.
I think Amazon is a better deal than Nvidia as an investor. If you wanted to go with the mega tech, I think Amazon is a better buy than Nvidia. It might not play out that way as a trade, but I think given the earnings and the cash flows, if I had to buy a stock now and you force me to buy a big tech, I would rather own Amazon or buy Amazon than buy Nvidia right now.
And another thing he's saying, which I think is super important, is like, don't get obsessed about Nvidia. Nvidia is not the only stock in the game. There's a lot of great stocks. He gives you one great example, Amazon. Amazon is a great business. It's trading not as big of a premium as Nvidia. We'll talk about that in a second. We'll show you a comparison between Amazon and Nvidia. And he's basically saying, look, servers are a great business as far as AI. And that's a great business for Nvidia. But the whole cloud business is growing at a very similar pace, rightfully so. And Amazon is basically dominating that market. Maybe not as much as Nvidia dominating servers, but still. And it's trading at a less significant premium, and you might want to consider that. I cannot argue with this man, even though I don't have a position in Amazon.
I think a lot of people believe in mean reversion, which is they assume that if small caps have underperformed for a while, they've got to come back. I'm going to posit that there's been an economic shift, that the way the economy is structured is you have more winner-take-all businesses, which effectively put smaller companies at a disadvantage. So one reason why I think small cap stocks have underperformed larger cap stocks, not just over the last few months, but over the last decade, is because the market seems to have come to that realization as well. It might have overcorrected and there might be some kind of a reversion back at least to a more normal pricing. But I'm going to argue that those people who expect the old small cap premium, small caps historically have delivered higher returns than large caps to come back, might be barking up the wrong tree. With 3 or 4 winners in every sector, what is it in the economy that's going to force the smaller companies or allow the smaller companies to catch up? It just doesn't work for them.
And he also talked about these small caps, the Russell 2000, the IWM. Now, we know Tom Lee is one of the biggest proponents of this asset class going into the Fed cutting cycle. Well, Aswath presented a little bit of a different position. And he said, look, guys, the mere fact that the IWM was lagging the S&P 500 doesn't guarantee that lag is going to close. And maybe it will never close because the entire industry is going to this place where one winner takes all. And these smaller companies just can't compete with the big boys. Now, that's a valid argument. The only problem with that argument, and I got to be critical here because I encourage you to do the same with my videos, is that, look, number one, there is an element he didn't mention in this video, which is that lag should close because of a different monetary policy. An easier monetary policy will encourage small caps more than the bigger companies. And number two, there's a lot of big companies who are dominating their market, but the total addressable market, the total market in which they operate is just smaller. So the point is there are leader companies inside the IWM. They're leading their market, but the market is just too small, so they are relegated to the IWM instead of the S&P 500. That takes away a lot of the argument here. So I don't know whose camp you're on, Aswath or Tom Lee, but there's arguments, as you can see, in either side. Now, I want to play a clip by Eric Jackson from EMJ Capital talking about Nvidia and making a lot of sense. Check it out.
It's the most important stock in the world right now. So, if they laid an egg, it would be a major problem for the whole market. I don't think they will. I think they're going to surprise to the upside. If you look ahead at sort of what Wall Street is counting on a go-forward basis, it's almost like this explosion of AI revenue that they've seen over the last year and a half, is going to just sort of dry up. And I just don't think that's the case. Eric Schmidt gave a talk at Stanford recently. It was sort of leaked a few days ago, and they had They took it down off of YouTube because he made some critical comments about the work culture of Google. But embedded within that talk, one of his throwaway lines was, in talking to Sam Altman, they said that together they both believe that each of the hyperscalers, plus the OpenAIs of the world, we're probably going to have to spend something like $300 billion in NVIDIA chips over the next few years, each. $300 billion each. So, NVIDIA could basically only supply those hyperscalers, and their order book is going to be full for the next 4 years. It's a massive, staggering amount of money that's sitting in front of them. And, God love the Broadcoms and the AMDs of the world, but, the vast majority, like more than 95% of that revenue is going to go to NVIDIA.
This is the most important company in the world right now. Everybody understands this. Everybody accepts this. And if you're not admitting to the fact that NVIDIA right now in 2024 is the most important company in the world, well, you're kind of coping. Number two is saying, look, it's not probable that this company at this juncture is going to slow down. We're talking about years and years of CapEx investments by the big companies buying up NVIDIA chips. Now, he also brings up the famous Eric Schmidt talk that everybody talks about, in which the former Google CEO basically said, look, guys, we're looking at about $300 billion of spend by every hyperscaler in the next few years into NVIDIA chips. This is massive. That alone is NVIDIA's business for the next 4 years at the same level they are right now. So they're not very likely to slow down for the next 4 years. Now, we actually ran a few fundamental tests on NVIDIA, which I want to show in this video, because it's going to put a lot of things that Aswath said earlier and a lot of things that Eric said earlier to the test. Now, one is a DCF. We ran a DCF right out of the gate. A DCF doesn't give you a price target for the next 5 years. It tells you what the company is worth today. We ran a DCF based on a 10% discount, 4% long-term growth, and we had a 50% EBITDA growth per year. Now, before you go crazy, 50% is actually a lot lower than the current EBITDA growth rate that the company is presenting, which is about 700%. So we took a much lower EBITDA growth rate, and we got $172 per share, which is a 34% upside. So based on our DCF, the share price is currently 34% undervalued today. Now, the next thing we did is run a 5-year model valuation. What would be the share price in 2029? The assumptions are 35 to 50% revenue growth per year, same margins, and 10% discount. Now, you might argue that the margins are going to come down, but so far, this is a quasi-monopoly and there's nobody on the horizon. And the numbers we got are absolutely insane. The bear case for the next 5 years is $212. That's a 65% upside. The mid case was $323. That's a 151% upside. And the bull case was $434 from today, which is a 238% upside. Now, we also ran the MVP scorecard, and this company scored 90. The only test in which it failed was the PE, the price to earnings ratio. It was above 30. Now, the forward PE is actually 38, so they're damn near close to a 100 score, which we've never seen on this software yet. Now, NVIDIA might be the first company to do that in a year or two. Now, we also compared NVIDIA to Amazon and Microsoft, just to show you the huge differences and why NVIDIA is probably one of the most attractive companies in the market right now, even at this price. Look, the revenue growth for NVIDIA is currently at 200% per year. Amazon is at 12%, Microsoft is at 16%. Now, they do make more per year, 245 for Microsoft, 600 billion for Amazon, and NVIDIA makes only $80 billion, but their growth rate is literally 10, 20 times more than Amazon and Microsoft. R&D expenses are a fraction of the other companies, 9.5 billion versus 90 billion for Amazon. Operating income. So check this out. With much less revenue, NVIDIA is generating $48 billion of operating income. That's very close to Microsoft with 109 and even closer to Amazon with 54. Now, if you look at CapEx, capital expenditures, look, it's a fraction. 60 billion for Amazon, 44 billion for Microsoft. And the funny thing about it is that all these expenses are actually going from Amazon and Microsoft to NVIDIA to buy these chips. And if you look at the debt structure, again, $11 billion of debt versus $150 billion of debt for Amazon and $100 billion debt of Microsoft. And look at the operating income margin, 60% for NVIDIA. Insane. If you compare it to the 9% of Amazon and the 45% of Microsoft, they have the best margin of any big tech company you can think of with a forward PE of 38. compared to the 31 of Amazon and 31 of Microsoft. So they're not really trading at such a great premium despite knocking it out of the park in every single category you can think of compared to behemoth companies, great companies like Amazon and Microsoft. So to me, it seems that Amazon is a great company, Microsoft is a great company, definitely good additions to any portfolio. But Nvidia is in a league of its own. And it's absolutely spectacular to see it play out. And the people who think it's a bubble are absolute idiots. And it doesn't mean that Nvidia isn't going to be volatile for the next couple of weeks, couple of months. Short-term volatility for Nvidia is almost guaranteed. And as a long-term investor, all you have to do is be ready. When it happens, DCA. That's it. It's a great business. And great businesses always trade at a premium. And the same people who told you that Tesla is overvalued when it IPO'd are now sitting on the sidelines saying the same thing thousands of % down the drain. And there's actually a way that's very simple to invest in companies like this that are trading at a premium. You dollar cost average, you buy all the time, and if the price drops, you buy faster. If the price rises, you buy slower. At 38 PE, it's actually not even that expensive. Now, the capex cycle in which Nvidia is currently leading this entire world is about 4 to 5 years away from being exhausted, which means that for the next 4 to 5 years, Nvidia is pretty much a monopoly. They can set their own prices. And to say that this is kind of a Cisco example is just kind of a misunderstanding of things. Cisco was a telecom business. Telecom capex cycles can last decades. This is a whole different enchilada, folks. Every 3 to 4 years, people are going to need new servers, new chips. You've seen how the Blackwell, the H200s and H100s, every 3 to 4 years, people will need new stuff from Nvidia. And with the great management like they have right now, with a great track record, it's very hard for me to bet against them. But of course, as always, I'm going to tell you one thing. Do your own research. And you can actually do it with Stock MVP. I showed you how I'm doing it with Stock MVP. I'm actually going to give you a code, TOM25, that's a 25% discount for life just because I came back from vacation. I'm in a good mood. Also, join our Discord, discord.gg/TomNash. It's free to join. And the Academy has now one final spot left before we close it down for the next month until October. If you want to pick up that spot, great. If not, that's also fine. Just stick around, watch the videos, share it with people who actually want to know and get better at this. Thank you so much. I'll see you in the next one. Peace. Now, CNBC got on Southwath. Southwath, what the fuck?